Welcome to the Deep Dive. Today, we're really digging into China Eastern Airlines, focusing on their 2024 performance based on their latest annual report.
That's right. We're going beyond just the headlines to get a proper feel for their business, the financials, and where they might be heading.
It was definitely a complex year for aviation, wasn't it? You had recovery mixing with geopolitical stuff, economic shifts.
Absolutely. And specifically within China, a huge surge in domestic air travel, but still navigating that global uncertainty. It sets quite the stage for an airline like China Eastern.
Okay, so let's dive in. Our mission today is to pull out the really crucial insights here. What are their main business areas doing? How healthy are the finances really? And what's the plan for shareholder value?
Right. So the core is obviously airline transportation. No surprise there.
Sure.
But they do list these other related businesses, things like insurance by business agency services, basically selling travel insurance, I imagine.
Okay, the add-ons.
Yeah, exactly. And e-commerce, an in-flight supermarket, which, could be anything from duty-free to snacks and even wholesale and retail of goods, trying to build up other revenue streams, it looks like.
Interesting. So how are they planning to grow? The report seems to lay out a pretty detailed strategy.
It does. A big piece seems to be this Yangtze River Delta integration. They've launched a rail air transit service center specifically at Shanghai Hongqiao Railway Station.
Ah, linking flights and trains directly.
Precisely. And they've upgraded what they call Airbus Combined Transportation 2.0, plus a regional access product. It's all about making connections smoother in that key economic zone.
That makes sense. The Yangtze Delta is massive economically. Making travel easier there could be a big win against, say, high-speed rail for some journeys.
Could be. It's about convenience. They're also pushing really hard internationally. Added 11 new routes in 2024, places like Riyadh, Marseille, Kazan.
Wow, okay, spreading out.
Yeah, and developed 7 what they call international express routes. Think Shanghai to Singapore, Shanghai to Bangkok, probably targeting business or time-sensitive travelers. Plus, more flights to Europe and Australia. They actually state they want to outrank their peers on international routes.
That's ambitious. Reflects the recovering international demand, I suppose.
Definitely. It boosts revenue and their global brand. But it's not just external growth. They talk about comprehensive deepening reform.
Sounds significant. What does that involve?
Well, it seems quite broad. Studying guidelines from the CPC Central Committee, so top-level policy alignment, but also practical stuff like reforming their marketing agencies, their management structure, even the head office setup. It feels like an internal efficiency drive.
Getting their house in order to support the expansion.
That would be a logical goal, yeah.
Yeah.
Streamlining things internally often helps manage external growth and control costs.
They also mentioned something called aviation plus cultural tourism. Partnerships with museums.
Yes, strategic agreements with the National Museum of China and the Shanghai Museum. And a museum priority product. It's a clever way to tap into that cultural travel market, maybe offer unique packages.
Niche marketing. And they had that Harbin Asian Winter Games partnership too, right? The official airline.
They did. Themed planes, special flights, great visibility, great branding opportunity associating with a major event like that.
Okay, shifting gears a bit. Technology. Digital transformation seems like a huge theme.
Oh, absolutely central. They hosted a big aviation forum in 2024, the North Bund one, focused on digital flight, intelligent sky.
Right.
And they highlighted progress on the C919's commercial operations system, that's China's domestically produced jetliner, a big deal. Plus agreements to develop Shanghai further as a major international hub. It screams investment in tech.
Which you absolutely need in aviation today.
It's fundamental for efficiency, passenger experience, safety, everything.
Speaking of safety, that's obviously covered. Strengthening safety management, operations, training, maintenance, the fundamentals.
Non-negotiables, really. They also mention optimizing how they match capacity, planes, and crew to demand. Basic blocking and tackling for an airline, but crucial for efficiency and reliability.
And their network strategy. Still focused on Shanghai.
Very much so. Shanghai is the core hub, guided by, and this is their phrase, more long-range flights, more international flights, and more flights in emerging markets. Reinforces that global push.
They're not doing it all alone though, right? Partnerships.
Correct. Joint ventures mentioned with AFK, Etihad Airways, and lots of code sharing or SPA cooperation. Virgin Atlantic, Air Europa are named. It's a way to expand reach without flying everywhere themselves.
Standard industry practice, but important. What about marketing?
They mentioned innovating their product system, breaking it down into basic, touchpoint, and integrated products, and generally being more proactive in marketing efforts, trying to tailor offerings, perhaps.
And behind the scenes, there's this Business and finance integration. Sounds like getting the numbers people working closer with operations.
Seems like it. Dedicated teams, better digital platforms, using data analysis to optimize processes. They specifically call out cost control fuel, takeoff and landing fees, the big ones.
And they claim some serious savings from them.
They do. 313 specific projects yielding RMB 1,555 million in efficiency gains. That's a significant number, shows those efforts are having an impact.
Wow. Okay. And customer service. Always key.
Big focus there, too. They have this four fines concept: meticulous, precise, exquisite, and refined. Sounds very aspirational.
The four fines.
Plus, reforms in the service system, assessing key touch points, launching Eastern e-services. They mentioned improving on-time rates and transfer efficiency, too. It's all part of the Quality and Efficiency Improvement Year for Civil Aviation Services initiative.
Lots of initiatives. It also looks like they're doing a ton of long-term planning.
Yeah, mentions of deepening reform implementation plans, a specific Yangtze River Delta strategy, a plan for Shanghai as a world-class hub, adjusting their current 5-year plan, and even starting prep for the next one, the 15th 5-year plan. Thinking very long-term.
And organizational reform alongside that. Streamlining headquarters.
Yes, streamlining departments, planning a tiered management model. Again, points towards efficiency and maybe faster decision-making.
Plus that digital transformation plan we touched on. And a share repurchase program, which we should definitely circle back to when we talk shareholder value.
Agreed. And risk management, naturally. Identifying and mitigating risks, special audits, standard, but critical in this industry.
To wrap up this section on strategy, they're also pushing market competitiveness, targeting pre-sales, transit business, premium cabins, group travel.
Right, trying to capture value across different segments, upgrading direct sales, new distribution channels, improving the overseas website, optimizing the frequent flyer program. It's a broad push.
And finally, more on that integrated travel idea, multimodal transportation, air rail, air bus, even air water, apparently, plus those air plus cultural tourism products again.
Yeah, really trying to make the whole journey seamless, connecting different transport modes, and improving online and offline services alongside that.
Okay, that's a lot of positive strategic movement. But what about the headwinds? The report does mention a complex external environment.
It does, and acknowledges needing to overcome difficulties and forge ahead against pressure. It wasn't an easy year universally.
They talk about huge operating pressure. Why?
Well, they point to structural changes in supply and demand, which can mess with pricing and load factors. And the usual suspects, fluctuations in oil prices and exchange rates, those can swing profitability wildly for airlines.
Huge cost factors.
Exactly. And then there's a domestic challenge from China's high-speed rail network, the 8 vertical and 8 horizontal network they mention. That puts pressure on shorter air routes.
So direct competition from trains. Needs faster air corridor development, they say.
Right. They need to focus on where air travel still has a clear advantage. The report also lists a whole slate of other risks, market risks like economic slowdowns or competition, policy changes, safety risks, of course, financial risks beyond fuel and FX like interest rates, supply chain issues, market volatility, environmental regulations. It's a long list.
A reminder of just how complex running an airline is.
Absolutely. Effective risk management is non-negotiable.
Okay, let's pivot to the financials for 2024. The big headline seems to be revenue, right? A pretty significant jump.
Yeah, operating revenue went from roughly RMB 114 billion in 2023 up to RMB 132 billion in 2024. That's solid growth, clearly showing the market recovery.
And the bottom line, still a loss, but much improved.
Much improved. Net loss attributable to shareholders dropped from about RMB 8.2 billion down to RMB 4.2 billion, so they cut the loss almost in half.
That's substantial. Loss per share improved, too, from RMB 0.37 to 0.19, moving firmly in the right direction, even if not yet profitable.
Exactly. It shows the impact of that higher revenue and, likely, those cost-saving efforts we discussed.
Interestingly, total assets actually dipped slightly, while shareholders' equity ticked up just a tiny bit.
The asset decrease could be various things, maybe selling older planes, adjusting financing. The small equity increase is generally positive, suggests a slightly stronger balance sheet foundation, but it's marginal.
Now, traffic numbers, they hit record highs.
That did. Total traffic volume, that's ton kilometers, was up over 36% to 25.25 billion, and they carried 141 million passengers, up nearly 22%. Huge numbers.
That's a lot of people. But the load factor, how full the planes were, actually went down from almost 70% to about 63%.
Yeah, that is interesting. It suggests that while passenger numbers soared, the capacity they added the number of available seats grew even faster. Maybe they were positioning for future growth, or maybe it took time to fill those extra seats, especially on reactivated international routes.
Okay. What about cargo, freight?
Bit of a mixed picture there. Revenue freight ton kilometers surged on international and regional routes up 67% and 61% respectively. Domestic was much slower, only up about 6.6%.
But the total weight of freight carried decreased. How does that work?
Good question. It could mean they carried bulkier but lighter goods, or perhaps focused on higher value, lower weight cargo internationally. It's hard to say precisely without more data, but the international freight recovery looks strong in revenue terms.
Okay. And freight load factors were generally down too, except internationally where it was only slightly down. And yields revenue per unit were down across the board.
Correct. Lower freight load factors and lower yields suggest maybe increased competition in the cargo space, or perhaps strategic pricing to capture volume, especially as the market normalized post-pandemic. Earning less per unit carried isn't ideal long-term.
Let's talk debt. Any progress there?
Yes, quite significant, actually. Interest-bearing liabilities loans, bonds, lease liabilities decreased by almost 11%. They attribute it to adjusting their funding structure.
That's positive for the balance sheet.
Definitely. They also shifted their debt profile, reducing the proportion denominated in US dollars, which helps mitigate currency risk. And they mentioned using foreign exchange forward contracts to hedge against currency swings on capital spending, buying planes, for example. Sounds like sensible financial risk management.
And one last financial point, those tax losses, they have a huge amount carried forward.
They do. Around RMB 83.3 billion in carried forward tax losses as of year-end 2024. These can be used to offset taxable income in future years, potentially up to 2029.
So as they hopefully return to profitability, those losses could shield a lot of income from taxes.
Exactly. It's a significant deferred financial benefit.
So summing up the financial performance drivers, strong market recovery, boosting revenue, but still pressure from costs and supply-demand shifts. Their own cost-cutting helped significantly, as did the international recovery. Is that fair?
I think that captures it well. It's a mix of favorable market wins and their own internal efforts driving that improved, though still negative, bottom line.
Right. So given that improving picture, what are they doing to create value for shareholders now?
Well, the board is proposing a 2024 profit distribution to the annual general meeting. The report doesn't detail what it is in these excerpts, but just making a proposal is usually taken positively.
Suggests confidence they're on the right track.
It does. They also mention their dividend policy allows for payments in cash, shares, or a mix, giving them flexibility depending on their financial position and what they think is best for shareholders.
And the share buyback we mentioned earlier.
Yes, they initiated a program. The stated goal is boosting market confidence and projecting a positive image. While we don't see the 2024 results of the buyback here, the report mentions the plan to repurchase A shares for RMB 300 million to 600 million.
Which effectively returns capital to shareholders by reducing the share count, potentially boosting earnings per share and the stock price.
Precisely. It's another tool alongside dividends to enhance shareholder value, often used when management feels the stock is undervalued.
Okay, let's look forward then. How do they assess the business environment and their prospects moving ahead?
They seem quite positive overall. They state the long-term positive conditions and basic trends of China's economy are unchanged. That's their foundation.
A stable home market.
And they see continued growth opportunities internationally, both passengers and cargo, driven by China's ongoing opening up policies.
Plus more potential from integrating with things like cultural tourism.
Yes, building on those partnerships. They also note regulatory support. The SEHK, China's aviation authority, apparently has a policy of supporting large airlines like them to grow bigger and stronger.
A helpful tailwind, potentially. What about their own goals?
Very ambitious. They reiterate the goal of becoming a world-class airline, focusing on safety, innovation, quality, efficiency, environmental protection, the works.
Right.
And they've even introduced this new vision, building a world-class and happy CEA. It has 7 specific goals covering everything from safety standards and operational efficiency to profitability, brand influence, and even having harmonious and happy employees.
Happy CEA. That's quite encompassing.
It is. It paints a picture of a holistic approach.
Yeah.
They also point to strengths like their modern fleet 804 passenger aircraft, average age 9.2 years, pretty young.
Fleet modernization is key.
And their hub strategy, Shanghai and Beijing as core hubs, Xi'an and Kunming as regional ones. plus a strong commitment to ESG, environmental, social, governance, improving safety, service, employee care, community development, green flight.
ESG is increasingly important for investors and customers.
Absolutely. And underpinning all this is a continued focus on reform, innovation, planning for the future with the 15th five-year plan, improving management models, accelerating digital transformation, and ensuring good corporate governance.
So it sounds like they believe they have the strategy and the foundations in place for future success.
That's certainly the message coming through in the report.
Okay, so let's try and wrap this up. China Eastern showed real resilience in 2024. Revenue bounced back strongly, losses were cut significantly, even amidst ongoing challenges.
Definitely a year of recovery and strategic positioning.
Their strategy seems multi-pronged. Strengthening the domestic base, especially in the Yangtze Delta, pushing hard on international expansion, driving internal efficiencies through reform and digitalization, and forming key partnerships.
And they're starting to signal returns to shareholders with the dividend proposal and the share buyback plan.
Challenges obviously remain cost, competition, especially from rail domestically, and the global economic picture. But their focus on reform, innovation, and that world-class vision suggests they're actively shaping their future.
They've laid out a clear direction. The execution, as always, will be key.
And so here's something to think about. They have these really ambitious goals for a world-class and happy CEA. What do you think will be the absolute most critical factors for them to actually achieve that in today's fast-changing aviation world? How do they successfully balance that big international push with domestic pressures and the growing need for sustainable operations? That balancing act feels crucial. Definitely something to watch. Thanks for joining us for this deep dive today.